There is a level on Bitcoin where I'm swing trading it right now. So I am long Bitcoin. I can just quickly show you guys on this. I love charting with you guys because I think it's the coolest thing. But I just erased that line because I want to show you guys this one. Let me just zoom out here. If we take this high right here and connect it to right here through this high and through this high right here, and then we drop a parallel line down.
Gareth Soloway, the chief market strategist at InTheMoneyStocks.com, recently gave an interview to discuss the extremely unpredictable crypto and stock markets. Gareth has been calling for 20,000 Bitcoin as his medium-term aim for quite some time, even going against the grain last year when everyone else was positive. He even adhered to that call as the markets rose, despite the fact that many people online did not believe him and many doubters were calling him out for making a pessimistic forecast amid a bull market. He's also made an important prediction that gold will be the top-performing asset this year in comparison to risk assets. So far, after 5 months, his predictions have proven right. And so let's look at his interview to see what else he said about Bitcoin and where we're headed from here.
If I saved a few people, that's fantastic. I would have liked to have helped out more, but it is what it is, and we'll get a better buying opportunity on Bitcoin for the next big run. So you just got to be patient, deal with the pain. This is a normal cycle in Bitcoin. Every 4 years, many people talked about elongating cycles. I never saw it. There was no history of that. Many people talked about on-chain analysis as being important, and I always said when fear takes over, on-chain analysis, like fundamental analysis, means absolutely nothing. So great to be here, but let's get right into it. When you saw the November and October highs of just piercing $65,000 on Bitcoin, you have to make a note that the hype was ridiculous. They just launched the futures ETF at that point, and this was right in the midst of a big blockchain conference that we were at. So the hype was there driving it, and it was all retail. And the way you knew it was retail is because when it briefly got above the April highs, it didn't hold, and it kept on coming down, and it tried again, and it kept on coming down. And when you had that much hype and it wasn't able to hold above the 65K highs for more than a day, it told you smart money was selling. Then you look at things like this, right? You knew that the Fed, well, number one, inflation was coming. The Fed was going to have to remove all the liquidity in the market, or at least the stuff that they put in. That's insanely bearish for risk assets. It was a no-brainer to start to see this thing come in. And also when people are saying, oh, it took like 6 to 8 months from his call for it to come down. Let's keep in mind that if you look at previous cycles on Bitcoin, from the high to the lows, it's usually 12 to 18 months. But nothing in general goes from like the all-time highs to like a 20,000 low, 65 or 69 to 20,000 in like a day or two. So you have to let the cycles play out. We're unfortunately not done going down. I still think we will tag 20 and probably even go lower than that before this cycle is fully over. Couple other cool stats, David. Number one, remember the Super Bowl this past year, how many crypto commercials there were? Go back to the .com Super Bowl in 2000. It was the same thing. It was known as the .com Super Bowl because all these .coms had paid like $1 million to do their ads. Another interesting factor, in November, the market cap of all of crypto was 3.1 trillion at its highs. The .com stocks all combined, 2.9 trillion. So there's these weird similarities. And then I know I've talked to you guys about this before, but if you look at the Amazon.com chart from 2000, when it topped out at the .com bubble, it is literally picture perfect to Bitcoin's chart here as well. Now, remember, Amazon went from $112 there all the way down to $6, and then it went to 3,800. So there is light at the end of the tunnel. I am a very strong long-term bull on Bitcoin, but you just have to accept the cycles. We can't force our emotions on the crypto market. You have to just trade what it gives you. And in this case, it was telling us. I mean, anyone who said that it wasn't telling us, it was just their emotion clouding their judgment. So if you take this high from March and April of 2021, and what you see here, and this is a technical tool that I use on a daily basis to tell if something is a real breakout or a fake breakout, all you got was one daily close above and then a reversal, one daily close above and never a higher close. And there's something called the confirmation signal that I've created. And basically what it tells you is that institutions and big money play games with smaller investors. What they do is they like to take out previous highs. which gets the small investor to think it's a breakout. And what they'll do is they'll reverse it back down. Now, the way you know it's a real breakout when it stays above and closes higher and higher 2 times over is that it takes too much money for the institutional money to manipulate that once it stays above for too long. You get too many people in the trade and pushing against them. So they're not going to risk billions of dollars on a reversal and maybe lose. They do it very short term. So that was one of the signals. The other signal, again, was just the bottom line that we knew that the government was just printing money, sending checks out to Americans. We knew that the Federal Reserve was doing what they were doing, that inflation was coming. And back a year ago plus, the Fed was all about transitory. Transitory was the only word. In fact, I did a tweet where I said, every time you hear the word transitory at the next Fed press conference, you do a shot. And basically you would have been dead because you would have had alcohol poisoning at that point. But the bottom line is, I said, it's not transitory. They're going to have to react more aggressively and pull all the stimulus back. And that is going to take you down. Now, in terms of the $20,000 target, it's very simple. Just look at the 2017 high. You have that pivot right there. That's basically what I saw it going to. Ultimately, you have to take out these lows, which we've already done. You can see we're down here on the chart. But again, that's my highest end target. I hope it stops there. I'll start to accumulate a hodling position there, but I will expect to continue to add below that level if need be. I would almost be a little concerned that it might be a longer cycle. So I think for instance, number one, I think you have to look at 2017 December high, and then it really didn't start we didn't take out the previous highs until basically 2021, right? So you're talking about 3 years of kind of sideways chop. Now, there were a lot of great trades in between there, but before you took it out. So I think you have to be thinking to yourself 2 to 3 years where, before it takes out 65,000 or 69,000 again. The only other thing we could possibly do, and again, you're right, technicals, when you're a technician of the charts, you're basically a student of history, right? And so what I would do is I would say, okay, well, let's go to the NASDAQ 100 and let's go all the way back to 2000 when the dot-com bubble burst. How long did it take, all right, for the dot-coms to recover? All right. In fact, I actually have to go to my weekly chart because it's that long. And this is kind of freaky, right? So, and we hope, and listen, I'm a Bitcoin bull, so I hope this long-term doesn't play out, but it took the dot-coms, the NASDAQ 100, all the way until 2015. So 15 years to recover. Now, I don't think that's going to be the case because the things that are ruling Bitcoin, number one, it's getting adopted more and more. So that shouldn't be the case. And then you also have to look at the fact that Bitcoin is an asset that is a stated max run versus the dollars that will continue to be printed in the next recession after that. And so ultimately, it's going to be a store of safety. So my guess is it'll be 3 years. But I think it's important to just note what happened with the dot-com, since we are referring to that as kind of the ultimate winter cycle. All right, so the long-term thesis is just the basics that, you have a government that, yes, they're pulling back on stimulus now because inflation's 8%, 8.5%. But we have to remember that this is already pushing us towards recession. I think inflation comes down to probably 4 to 5%, but it's going to be sticky there. The Fed will say, okay, well, as long as unemployment remains at under 4%, we're fine with that. We're going to continue to fight inflation. But unemployment is not going to stay there. You're going to see unemployment start creeping towards 5, 6, 7, 8, 9%, 10%. And that's going to basically say to the Fed, okay, well, now you have inflation at 5 or 4%, but unemployment's at 10. We now need to stimulate by printing again and lowering rates and doing everything again. So it's going to be a whack-a-mole. It's going to be which one is worse at the current time, which is which one are they going to attack. But the bottom line, the long-term thesis is that Bitcoin, blockchain technology, it is here to stay. If you want to see the coolest chart ever, and I love showing this, guys, here's your Amazon chart, and that's a trend line for Amazon that I've been trading off of. But I want to show you this. This is the .com M top on Amazon, right? And you can see what it did. So that looks scary, right? From all the way up here down. But if you go back and you zoom out on this chart, look at this. Now look at what that is. See that? That's what we're referring to as the .com bust. And this is, again, what I think eventually Bitcoin can do once we get through this period. There is a level on Bitcoin where I'm swing trading it right now. So I am long Bitcoin. I can just quickly show you guys on this. I love charting with you guys because I think it's the coolest thing. But I just erased that line because I want to show you guys this one. Let me just zoom out here. If we take this high right here and connect it to right here through this high and through this high right here, and then we drop a parallel line down, look at what you get. All right. So look at this low right here. We just touched this low here, all the way through here. So again, there is support here, but this is just a swing trade on the chart at this point. In terms of my longer term projections, right? So the one thing we have to kind of recognize here is that Bitcoin could go below 20. And as an investor, I need to be prepared for that. The downside max target I have. So minimum target's 20,000. The max target, you take this high to this low, it's $36,000 drop. You take this high, subtract 36,000, you get 12,000. So 12,000 is my low end target. I'm definitely okay buying in at 20. And just to be clear for everyone, I am buying. I don't have a crystal ball. I don't know the future, right? So what I'm going to end up doing is what I've been trained to do in stocks, which is you start looking for support at a level. You buy a small percentage of what you want to ultimately own, and then you basically space those buys out. So I might buy like, $20,000 worth at, 20,000, another 20 at 18, another 20 at 16, and kind of all the way down that way to accumulate. Or the amount of your portfolio you dedicate to any position needs to be really thought about, right? So I'll admit right here that I picked up some Terra Luna when it was like around the $30 to $40 level. But as soon as I saw that there were some issues there, I said, okay, I've only got this small percentage. I'm not adding to it, and that's it. And this way, what ends up happening is you might lose that investment, but it doesn't wreck your account. And that's so important to understand, folks, because, we're in a stock market now where things are just dropping by integers, like 10% a day over and over again on some of these tech names. And it's getting nasty. So you have to allocate properly. But the bigger thing on Terra Luna and the UST is that it actually influences the stock market. Number one, it's very, very bad for crypto, right? So we talked about deleveraging back in October of last year. I said that would be the cause of a drop in Bitcoin down towards 20. We are seeing that obviously happening. But when you see this kind of, there's already skeptics on the crypto sector, right? Elderly Americans, elderly people all over the world, not everyone obviously, but even a lot of institutions, the government potentially. And to have an issue like this is not healthy for the crypto markets. In addition, it's very destabilizing. You already have a stock market that was in free fall. To have something like this, remember, the same investors that own Terra Luna, that own Bitcoin, that own Ether, that own Solana, they're the same investors that own Tesla. They own some of these other stocks. And so when they get margin calls in crypto like this, they're going to sell some of their stocks, which then creates a waterfall effect in all of assets. So this isn't just kind of an isolated thing anymore. You could look at this as a contagion, and I would almost guarantee the Federal Reserve is keeping a very close eye on this. One of the reasons why I have multiple crypto accounts is because there was a point where someone jacked my SIM card and they actually got into my crypto account. Luckily, there was an account I didn't have funded. But I mean, if someone does that and steals your crypto, you don't get it back. Now, if it's a stock account, FDIC insurance. If it's a banking account, FDIC insurance. You need these good things to come in. You need good positive regulation. Now, yes, there's bad regulation, but crypto needs regulation. You cannot have issues like what we're seeing with UST and Terra Luna going on. It is not healthy for the environment of crypto, nor the whole economy. And by the way, one other thing, what's really bad about the crypto markets here is that you have a situation where a lot of 20 to 30, maybe 40-year-olds, they had all their money in crypto. These are the people that a lot of them, they can't afford. I mean, this is like the money they're just starting to save for a house. And you can't have these people. I mean, it's one thing if you have a retiree that has millions of dollars and they lose 50,000 in crypto, but when someone just has 50 and they're all in on crypto, bad scenario. In 1999 and 2000, lots of people jumped in late in the game and bought into the dot-coms only to see their money get wiped out. It was commented for the next 7 years, where's the retail investor? And finally, the retail investor came back when the market seemed to go up every single day. They came back in 2007 only to get wrecked in 2008 and 2009. And then really until the pandemic, I kept on hearing on all these stations, well, where's the retail investor? The retail investor still doesn't trust this market after 2008, 2009. Well, guess what? They came back in 2020, 2021. It seemed like it was a casino they couldn't lose. And now look at what happens. And this is the way it works, is that these investors many of them will be gun shy going forward for many, many years when they should be buying at the lows. They're going to be too gun shy because of getting wiped out prior. The biggest lesson is, if you cannot control your emotion in investing, you need to turn off social media and any stations out there that are pumping, right? You have to be careful because social media now with Twitter and some of these others, FinTwit and all these other things, it's really amplified the hype more and more, and it will amplify the panic and fear even more as well. And that is not good. You need to kind of have a thesis going in. One of the biggest lessons I learned as an investor early on, and I took a lot of losses before I learned this, is that I need to know, number one, how much money am I willing to commit to any one trade ahead of time, not once I'm in the trade and I decide, oh, it's going against me, let me double up, triple up. It's all right, what is my total amount initially? Then you put in a percentage to start and you slowly dollar cost average in. All right, if you're right off the bat, great trade. It goes in the money. You might not make as much, but you're protecting yourself. Protecting yourself from downside is more important than trying to just make millions overnight.